Good morning and welcome back to the Homestead CPA. My name's Dan Snyder. We're starting the second video in a series of 15 videos that are discussing topics of accounting, legal, and tax issues for homesteaders. Today, it's going to be probably a shorter video than some of the others because, for the most part, I'm going to be giving you homework. Today, I want to talk about what are your intentions with respect to homesteading. Homesteading means so many different things to so many different people. And so for your own sake, and if you are looking to speak to an advisor, whether it's a legal, accounting, or tax advisor, you need to be able to identify to them what it is you mean by homesteading, because they may be what they consider to be a homesteader and be completely different from what you mean. So let's talk about what it means and what it means to you. There's a couple of different reasons for doing this. One, you need to know whether or not this is personal. You need to know whether or not you're intending to maybe make a little cash on the side, or whether or not you're going to be doing a business. And then the question always becomes, well, what is it you're doing? Are you raising vegetables? Are you raising chickens? Are you raising chickens because you want eggs? Are you raising cows? Are you growing a bunch of pecan trees? What is it that you're going to do? You may be growing herbs so that you can sell tinctures. You may be making soap. So there's all these different things that you can be when you're talking about homesteading. Now, the other thing that homesteaders have, especially in this day and age, is the opportunity to make money from their activities, but in a different manner, specifically YouTube or other online resources where you can sell content. That's a different way, a different activity than the actual content that you're creating. So I may be raising chickens to sell eggs. I may have them out on the pasture and be selling farm fresh eggs, but if I'm also videoing that so I can put that on YouTube and try to monetize that activity, that is a separate activity. So all of these things are individual, discrete components that you need to make a list of so you know what you're doing. A couple of reasons why. First of all, how much is it going to cost you? Okay. I've used this example in the past. I remember when I got our first egg, I went into the house and proudly showed my wife, this is a $1,000 egg. Now the rest of them have gotten cheaper since then. But if all your eggs cost $1,000, you wouldn't be raising eggs. So that's really the concept, whether it's personal or business. What is it you're doing and how much money are you spending to do it? If you're just trying to raise food for your family and that's it, there may not be a whole lot of activity. But in the next video, we're going to be talking about record keeping and why it's important to keep records, even if what you're doing now is a personal activity. I'm going to give you an example of this, and I'm not picking on fishermen, but I have a couple clients who have gone through this exact same process. So let's say you love to fish, and you buy your first fishing boat, you pay $5,000 and you get a boat that doesn't sink and you get a motor that starts occasionally, and you go out and you fish because you love to fish. This is my brother-in-law. He would spend every day out fishing, or at least every day that he thought he could catch a fish, because he just loves it so much. He's not into competitive fishing. He doesn't sell the fish. He just enjoys fishing. But let's say you buy this fishing boat, and after a couple of years, you have a friend of yours who talks you into entering a competition at the local lake, and you win $1,500 in a fishing contest. And you think, wow, that's pretty good. I may want to try and do that again. And so then maybe you enter another one and you win a little more money. And then you may think, if I had a new boat, I could probably do even better than that. So now you want to go down and spend $40,000 or $50,000 on a new boat, or $80,000 or $100,000 on a new boat. But you go out to competition once and then you stop. Is that boat personal, or are you using it to try and make money? Well, that depends on what your intentions are. If your intention was to buy that boat and to use it to enter competitions, then it may be partially deductible. And we're going to talk about that in the fourth series of the videos that we're going through when we talk about the concept of hobby losses. Because here's the thing, that boat is going to be used in the competitive fishing that you're doing, but you're also going to take that boat out and go fishing when you just want to go fishing. You may also decide that, I know where the best spots on this lake are. I could be a guide. And so I could take people out on this boat and make more money. All of these things are different activities. Some of them are personal, some of them are business, and some of them are different kinds of business. So while when you first purchased that boat and you paid your $5,000 for it, it was a personal item, you may at some point in time in the future turn that personal asset into something you use in your business. And just because you bought it 2 or 3 years ago and used it personally does not mean that it is not now potentially something that could give rise to a tax deduction to offset some of the income that you're earning. Records are important. As I said, we'll talk about that in the next video. If you can't show how much you paid for the boat or when you paid for it, then taking a tax deduction can be exceedingly risky. So we're going to talk about that. But what I want to do today is to get you to focus on exactly what it is you're planning on doing. But then if you take nothing away from today's video, what I want you to remember is that our intentions change over time. And so you may start off entirely intending to not have any business activities at all on your property. You may have no intention of making any money. But 2 years from now or 3 years from now, like the example of my fisherman client, you may change your mind and you may decide, well, hey, now I do want to try and make some money because I think I can make money. It's at that point in time when your intentions change that it's really important, it's vital really, for you to talk to certainly your tax advisor, possibly your legal advisor and your accounting advisor, because you may need to keep different records. You may need to own that asset in a different way, in a different manner. And for tax purposes, you may need to go back and try and find that receipt for when you purchased the boat. So it's important to understand why all these things matter. But if you can't explain to your advisors, and to yourself for that matter, what it is you're intending to do, I suggest you wait to start your homesteading until you actually understand what it is that you want to do. Many of these things have different issues that come up, and so you need to be prepared to speak to your advisors about those. So I'm going to leave it today with some homework for you, and I want to remind you that, as always, remember, even Jesus paid taxes.